And we are 15 minutes away from opening our grain and livestock trade here at midweek. Mark Oppold, thanks for joining us. Whether watching RFDTV, soon to be in HD here on DirecTV. We'll have more on that and let you folks know and share the word with rural America and our friends in urban areas as well about the good news coming to those of you on DirecTV. And tuning in on rural radio, Sirius XM, channel 147. Welcome one and all. And we welcome Rich Nelson from Allendale, leading things off here. Rich, getting ready for this trade today. Don't expect a whole lot again. You and I were talking here before. It's kind of been a range-bound type grain trade, and especially more of the same here with all these numbers coming on Friday.
Certainly true. And we're looking for new information to move these markets, obviously, and we aren't getting any major changes as far as the Brazilian weather situation. We all know the U.S. harvest numbers are doing right now pretty much as expected, if not a little better. So it does look like this market is turning its attention towards Friday's two reports, grain stocks and also the small grain summary.
Yeah, we'll get to that in a minute, but on the back of the harvest, just briefly here, history shows that sometimes the producers will harvest those lower yielding fields first, so they know they've got a good field here or there. They want to make sure that dries down, and a lot of times the better yields even come later.
Certainly might be the case, and a lot of people are wondering if we will have some higher yield revisions, maybe in the next report or two here from USDA, based on what's been a pretty good harvest result narrative right now. So yes, I do think that's certainly something that the trade is questioning right now. Now
back to the stocks report that comes again on Friday, the quarterly report. So we only get 4 of these a year. We had one back at the end of June, but it's interesting. They're looking for a stocks number here about 2.3 billion bushels, but when you look at a year ago, Rich, as you know, we had 1.7 billion. So it does show the supply we know we've had on hand all year long, and when you see that year ago number, wow, it really sticks out there.
Certainly does. And of course, as we all know, this is coming from last fall's harvest, which was a record.
Right.
So we'll have this overhang with excess carryover stocks, like you mentioned here, carrying over into what is actually a smaller harvest this year, but supply won't be changing too much when you factor both those factors together here.
And again, soybeans the same. They're looking for a stocks number here, average number at 339 million. A year ago, it wasn't even 200 million. Wheat is pretty close to what was 2.2 billion is the number for this report. A year ago, that number was 2.5 billion.
And that's certainly right where we're going to see some changes as far as the market structure right now. And as we know with the wheat, we have a June 1st start of the brand new marketing year. So this represents what's been used after 1 quarter of usage. And like you mentioned, we are starting out with maybe a little better situation than last year's oversupplied situation there.
By the way, Marlon Bowling and John Jenkinson handing me a note here just before coming on. Another sale to China of soybeans, 132,000 tons for the 17-18 marketing year. So missed a day or two, but here we are, right back to soybeans to China.
Certainly right. And we obviously want to see a few more of these here lined up before we say we're back to the pace. We need to hit USDA's very aggressive record hopes, but this is certainly definitely a good sign here for us. Also, keep in mind, we're running at a good discount now, $8 per metric ton versus Brazil, U.S. Gulf versus Brazil out of Paraná. So in terms of the big issues right now, we do have a discount in prices. Looks like the market is finally reacting.
By the way, I don't want to forget our folks, an annual small grains summary also coming on Friday here. That's going to include wheat, but also including barley, oats, and rye. So those folks getting at least an annual look at their commodities.
Certainly true, and this is the only real long-term solid survey USDA does for these specific small grains, and it will be watched very closely. As far as our own numbers, we're expecting a very slight decline from USDA's previous estimates. According to most of the trade estimates, probably won't see much of a difference either.
Very good. Well, we get started here in about 10 minutes in the grain trade and about 10 minutes in the livestock trade. Rich Nelson joining us from Allendale. We'll take a break and put Rich to work again looking at the livestock trade. But an up and down week, what does the midweek show us? We'll find out what he thinks anyway in 1 minute. And we are 10 minutes away from opening our livestock trade here. Wow, what a week it's been in the livestock complex, cattle and feeder cattle more specifically. Rich Nelson joining us from Allendale. Rich, all from the Cattle on Feed report at the end of the week or last week. But I want to start out looking at the box beef trade. Interesting, all the pressure in futures. We look at box beef prices, and what a big jump here overnight this morning. It puts us back to the highest level since the middle of August. How do you explain that with all the pressure in futures, yet box beef there's demand somewhere?
It definitely looks like this end user side is taking the approach that this is going to be just like last year, where this push in terms of September, October pricing is going to be more or less the low of the year in the trade viewpoint. So we've got this jump now, $5 for choice, $4 for select so far in just the first 2 days. On top of this, the end user interest, they've been doing deferred procurement 46% over last year over the past 6 weeks. So they're very aggressive right now on these lower prices.
Now, is that so that would just be for fourth quarter needs, or are they looking out even further?
And this is actually just for 21 to 60-day delivery. So 3 weeks out, they're going pretty aggressive.
I guess so. Again, we would thought that they were already done with their, holiday, starting that buying here, especially looking at the Thanksgiving maybe and getting started for that. But October pork month, we haven't even talked about pork here yet. That a lot of that buying may already be done.
Certainly true, and that's got to be something which has been factored in the market, but it's really interesting to see how we now have this changing interest on the beef side with end users maybe being quite aggressive. On the pork side, we've got cash hog prices now already at these December futures. So interesting to see how we're priced out right now. All
right, well, let's take a look. When we looked at the beef trade, let's take a look at the wholesale pork. Robin, put that up there, and we'll take a look at these numbers here. And arrows mostly pointing lower there, but again, that belly trade, we already know those that follow that know what it's done the last 30 days. But as you say, the cash market here equaling where futures are.
Certainly right. And as far as seasonals, normally we have weeks before we find the cash hog low. However, it's this market, like I said, is pricing this idea that maybe cash hogs will be done very soon. Even though we still have quite a few weeks lined up before we hit the year's peak in supply yet. So big questions still lined up.
Take a look at the cash hog trade here, and as we look at the cash prices from yesterday around the country, mostly all on a carcass trade, not even available here on a cash basis. But looking also, when you look at these the prices here, Rich, fourth quarter pork production expected to be 7 billion pounds. Hard to get around that number. That's over 5.5% higher than a year ago, and from the third quarter to the fourth quarter, it's the highest percentage increase in 10 years.
Certainly right. And USDA's got these very aggressive fourth quarter production numbers you're talking about right here, which is certainly true. Most of the trade fields is only to be about a 2 to 3% increase. So we have this big argument between USDA and most of the rest of the industry. Hopefully tomorrow's Hogs and Pigs reports can shed some light on this issue.
Well, there you go. Just right on cue here. We have the quarterly report tomorrow. Again, we get the quarterly grain stocks on Friday. Quarterly hog and pig report comes tomorrow. So again, only get 4 of these a year. Pretty important always in this fall, the September 30th report.
Certainly will be a big one for us in terms of the trade's mindset, maybe a 2% year-over-year increase. So we are still in expansion, but we are now in the process of bringing down a very rapid pace of expansion to now more manageable levels as we go into this 2018 timeframe.
Very good, Rich. We're going to get a look at the livestock summary here, but we'll let you go. We know that you're looking forward to that trade opening here in about 5 minutes. So we will keep in touch with you, and tomorrow morning, kick things off on a Thursday.
Sounds great. Thank you so much.
All right. Thank you. Rich Nelson joining us, leading off each morning here from our friends from Allendale. And real quick, don't have the numbers here, but the egg price is up another 2 cents, those of you following the egg trade, and our sheep summary showing another $10 decline here, generally around the country here, Janet. So there we go. And a 5% increase in our total egg sets. But milk prices, we'll keep an eye on that, egg prices rather, up 2 cents here again on the day.
All right. Thank you very much,
Sure,
Mike.
you bet.